The Bank of Montreal, meanwhile, has set a new goal for controlling expenses in the next 3 years, including aspirations for a bigger contribution to earnings from its U.S. operations. My colleague Amanda Lang spoke with the CEO, Darryl White.
I spent the last year really going around every single corner of our business, everywhere we do business. And one of the conclusions I came to is that, indeed, there are way more similarities than there are differences. So you talked about the P&C business in the U.S., the P&C business in Canada. We run them on an integrated basis. We have an integrated management team. We talk about our sales force and our structures as being the same. That's also true in our capital markets business, and it's also true in our wealth businesses. Now, the consumer behavior might be different, your own market share might be different, the way you go to market might be different, but the actual operationalization of the business in terms of how we do it against our values, our culture, and our sales delivery are really the same thing.
There is, I certainly have the impression that the regulatory environment is tougher here for parts of your business. Is that fair to say that it's different for sure in parts of the
being Canada?
Canada versus the U.S.? Does it allow for different opportunities in the U.S. because regulations are different?
No, I wouldn't say that it allows for different opportunities. In fact, what we do is, on the regulatory agenda, we operate to the denominator that says what's the standard at which we want to operate that will comply with all regulations everywhere we operate. So we have lots of regulators in the U.S. We have a principal macro-prudential regulator here in Canada, and it's served us well. As we've looked at all of the regimes that we've operated in, I wouldn't say you could compare one's tougher, one's easier. You can say there are different standards by which we have to adhere, and we do in all of those jurisdictions. But when you put it all together, we say there's one way of doing business, and it's according to the way we operate for our customers and the regulators.
On the risk side, though, as we get later in a credit cycle, there are growing concerns about covenant light, covenant free. That we're into that part of the cycle where there's lending going on that makes people nervous. How do you manage through that? How do you make sure that doesn't touch your bank?
Yeah, so it's a good question. So we have an important, you're in the leverage finance segment right now in your question. We have an important business in leverage finance. We do sponsor finance business in our BMO Harris subsidiary. We do some in Canada, and we do some in capital markets in the U.S. And when you're late cycle and you look at the covenants, what you do is you become a lot more selective, frankly, in the transactions you choose to participate in. We like the business, we've grown in that business, but we have it appropriately sized in the context of the entire bank. So when we look at the leverage finance market overall, there is a very interesting adverse selection process that occurs as you go transaction to transaction. I do agree that leverage levels in the market and terms are getting to the point where you have to be very careful, but it's also true that a lot of that is occurring outside of the traditional banking sector. So when we look at where we are on the risk curve, it's really nowhere that we haven't been before, and it's not a place that we're uncomfortable.
You also have ambitious plans for wealth. In the U.S., is that a place you would look for acquisitions?
We might. It depends on the circumstance. The acquisition question, we talk about it all the time, and it's not as easy as saying if it looks like this, we'll do it. It's circumstantial as well, so it's not a formulaic calculus. We look at the circumstances, we consider the opportunities. I would say we're a little bit more front-footed today than perhaps we might have been a year ago or 2 years ago or 3 years ago, but that doesn't mean we feel compelled to do something in the wealth segment or otherwise. But all the way back to the beginning of your question, if something looked like it was the right thing for us to do in that segment, we wouldn't shy away.